Hi there, welcome to Kneppy Invest. As a professional meteorologist who has been in this trade for over 20 years, if you can believe that, it has become quite obvious to me over those 2 decades that pattern recognition is a highly important part of the weather forecasting process. In fact, you might actually argue it's one of the most important parts of the weather forecasting process. And if I go through my everyday life, it also becomes quite obvious that pattern recognition plays a very important part when it comes to investing, particularly when it comes to technical analysis. And I have found myself over the past few years going back through charts each and every day, particularly those charts of companies that have recently released a positive or negative announcements. And I'm just looking for patterns, similar patterns that play over and over again. Now, pattern recognition isn't 100% foolproof. So you will always see the same pattern play out over and over again. And on occasion, when you see a pattern play out, you might think the share price should go up because of pattern recognition, but the share price goes down. So there's all these subtleties when it comes to pattern recognition. And that is something else I have learned over time, that you should not just use pattern recognition, but understand that when you do see a fairly similar pattern, it actually does increase the chances of your trade or your investment being successful. So in today's video, I'm going to go through quite a few charts, particularly charts of companies I've featured in my technical update or daily update over the past few weeks or 1 month. So I'll say about 20 charts I'll be going through today. And one of the things I'll be looking for is familiar patterns playing out. So the first chart here we have is the XJO. And I've already mentioned a few times over the past few weeks that I'm neither bearish nor bullish when it comes to the XJO. In fact, you could give me a bull argument, you could give me a bear argument, and I'll probably just nod my head in agreement with you. So I don't know which way it's going to go from here. And I think the whole market doesn't know which way it's going to go from here. So we won't linger too long on the XJO. Now, I am a little bit different when it comes to the NASDAQ, but I won't look at the NASDAQ. Now, the first company we're going to look at is Nufarm. Now, Nufarm is interesting because on the, I'll just decrease the size of my head here so I can see the date. So Nufarm on the 18th of May, their share price increased 14.2% on a pretty good announcement. And if we just zoom in a little bit more, this is a sort of one-day candlestick I am looking for when a company releases a pretty good announcement. I want to see a large green body, which is a fairly bullish signal or fairly bullish one-day candlestick. So those green bodies are bullish, those red bodies are bearish. And one of the things I like to see when I see one of these really good bullish one-day candlesticks is just to see how the market reacts the next few days, because it could do a few things. It could keep going higher, or it could do what Nufarm did and go lower, in fact, significantly lower, and it kept on going lower from there. So this did not surprise me. And the reason we saw some selling is because the share price of Nufarm was actually higher in the past. In fact, this day, which was the 18th of May, the share price was higher only 6 months previous to that. So there was a fair bit of resistance. The other thing to take note is, even though there was pretty good volume of the day, it wasn't overwhelmingly high volume. And then the next 2 days, we saw even higher volume. So the sellers really came in the 2 days after this positive announcement. And in fact, the share price has dropped from over $6 on the day they released this announcement to a current share price of $5.16. So almost a 20% decrease in share price over a short period of time. Not only that, share price right now is lower than the day before they released that positive announcement. So this is the sort of pattern I am looking for. And that's sort of like a 3-day pattern. I want to see a good reaction from the market on the day a company releases an announcement, but I want to see a good reaction from the market over the next few days as well. But even then, sometimes the pattern doesn't play out successfully. In fact, I don't think I have these companies in the list. And I'll just show you GUD, which is just GUD. and then I'll show you Orora as well. So back in February, when the company released their financial results, whoops, I have to just, okay, visitor come and gone. So back in February, GUD Holdings released some good results. And the market loved it. In fact, you can see 360 days, the share price rose 8.1%, 7.5%, and 4.5%. So you would think that's a really good reaction from the market. And then the share price pulled back in March. You can see that little pullback. And then it took off again. Now, what I was waiting for here, and I wasn't necessarily going to take a position in this company, what I wanted to see is the highs we saw just after that good results. I wanted to see a share price get past those highs. So that high was around $10.30. But the share price only got to about $10 before we started to see the share price drop again. So even though the company did release a good result and the reaction from the market was there, we did see some weakness coming in only 1 month later. And the share price has dropped significantly since then. In fact, the share price right now is lower than before those good results. So this is sort of a potential breakout that failed. And that failure took about a month and a half to play out. And the other company I want to show you was Orora. This was almost identical. Looked like a really good potential new trend in the share price that has failed. And it's taken a while for this to fail as well. So this is Orora. And again, the share price looked like it was going to break out. Share price increased 14.8% on the 16th of February, another 3% the next day, and another 2% the next day, and then on the 21st of February, 0.9%. So 4 days in a row, the share price increased from about $2.90 to about $3.52. And there was a bit of a high there. And you can see the share price really struggling to get it above that high in the next month and a half. The share price tried to get above it in April and failed. And since that failed, getting above that high, the share price has pulled back and keeps on going lower. And the current share price is $3.15. So again, just like GUD, I needed to see that highs just after those good results being beaten. I needed a new high. And if I did see a new high and then a higher low, that would mean the share price of Orora was in an uptrend. But unfortunately, the lows we see now are actually lower than the previous lows we saw in March. So even though this looked like a fairly bullish chart, I would say it's not bullish now. And if I did take a position in this company on the back of those good results, and I could have, I was looking at this company to take a position, I probably would have sold it by now because this is definitely looking a little bit more bearish at this point in time. So let's go on and look at a company that has released a recent or more recent good announcement. In fact, we're going to look at two companies, the next two companies. The first one is Serko. So Serko, this is starting to look interesting, just like those other two companies. So this company released a good announcement on the 17th of May. Share price rose 37.7% on really high volume. And the next few days, the share price remained at those elevated levels. We did see a little bit of selling, a little bit of a pullback in the share price. But the share price didn't drop all that far. And in fact, the volume on those days was fairly light. So that means when the share price pulls up on fairly low volume, there's no sellers. So all those who wanted to sell out, maybe because they bought in high prices in the past year or so, have had the opportunity and they're probably sold out. So that means there's more likely for share price to run up because there's no sellers. And that's exactly what's happened over the past, we'll say, 7 or 8 trading days. Share price has gone from $2.80 to $3.08. But again, I want to see $3.20, which is the highs we saw about 2 or 3 weeks ago. I want to see a new high, but it is looking more interesting for Serko. Now, a good trade would have been to buy in on that dip because it does look like, or did look like, there was a bit of support at about $2.80. And I'm not the sort of person who probably would have taken a position in this company simply because they're not profitable. They are growing, but they're not profitable. And my other problem with Serko is the share price wasn't at a long-term high. So last time the share price was this high was actually back in September, which was not that long ago, although you could say about 8 months ago. But I'm looking for at least a 6-month high, preferably a 1-year high. So this does look a little bit more bullish. And I think this little bit of a turnaround we've seen after that bit of a dip in the share price just tells me there is some strength when it comes to Serko. The other company with a fairly similar signal or pattern, if you will, then with as with Serko is Austal. Now they released a pretty good announcement in terms of a contract, a $3 billion contract, and just like similar but not exactly the same. Just like Serko, there was a really good reaction from the market, up 26% on the day. Now, the next few trading days, there was a little bit of selling, and there would have been a little bit of nervousness if I did take a position on that day or the next few days, because the share price pulled back lower than the trading on the day they released the announcement. In fact, the share price fell to almost $1.80. The low of the day they released the announcement was about $1.87. But you can just see the share price has really taken off since that little bit of a dip in the share price. And the main thing to take note on that dip in the share price was the decreasing volume. So those who wanted to sell out, particularly those who bought in high prices, say towards the end of 2022, have that opportunity to sell out. And that lowering volume is telling us there was less and less supply coming onto the market. And with less and less supply, and with pretty good demand still there, that's why the share price has increased from about $1.80 to a current share price of $2.33. And share price right now, not a long-term high. Last time the share price was this high was back in November. But this tells me, just the reaction from the market, pretty good volume as well over the last 8 trading days, significantly higher than when the share price pulled back. That is telling us there's a lot of demand right now for Austal. And that's why the share price has gone on a really good run. But probably the only red flag I have is just the share price is still only at about a 6-month high. I would like at least a 1-year high, but things are looking pretty good for Austal. Now on to a company I have taken a position in, EBOS Energy. And the main reason I took a position in EBOS Energy is because it broke through a nice little resistance zone at $3. Now $3 or round numbers tend to be fairly natural resistance levels in themselves because it's human psychology. For some reason, humans love round numbers. I don't necessarily love round numbers. In fact, when I buy shares, it's typically not a round number. It's typically an non-round number. So if I wanted to buy 3,000 shares, I usually buy 2,999 or 3,001 shares. Very seldom do I buy round number shares, but most people do. Most people buy round number shares. And when they put in limit orders, it's usually at round numbers. I see this all the time. When I look at the depth, the buy and selling depth, you see at round numbers a massive amount of trades or massive amount of bids at those round numbers. Anyway, so this is a trade for me. So I'm not in EBOS Energy for the long term unless uranium prices keep on going up and EBOS Energy price keeps on going up. And then I might become a longer term holder of this company. But the main reason I took a position in EBOS Energy, it broke through $3 and has remained above $3. That's the most important thing. Now, there has been sort of a fight between the bears and the bulls over the last few days. The share price right now is $3.13. Now, last time the share price was $3.13 was, I'm not even sure how long EBOS Energy has been on the ASX. Well, last time the share price of EBOS Energy was this level was back in 2008. So 15-year high. More than likely, there are no shareholders of EBOS Energy that bought in back in those days because more than likely they would have sold out or something like that. So we are talking about a 15-year high when it comes to EBOS Energy, which means there's not a lot of resistance, if any resistance, or for the share price to go higher. And more than likely, the people selling out now are just profit takers. But however, if the share price stays above $3, that's a good sign moving forward. And if the share price falls back below $3, I'll just sell out of my position. And when I say fall below $3, I don't mean $2.99 I'll sell out. So I haven't put a stop loss at $2.99. That will be ridiculous because the market could test that. The market knows some people would put their stop loss just below $3 and they will test it. Wouldn't be surprised to see the share price fall to $2.98 for a very brief period of time and then bounce back. And if that happens, that would be a bullish signal. So that's EBOS Energy. Now, on a related theme, we have Peninsula, another uranium stock, but it's not really moving like EBOS Energy. Now, this company has a market cap of 226. EBOS Energy has a market cap $1 billion, almost $1 billion, $1.1 billion. There you go. So I don't know much about Peninsula, but I do know they have a project in Wyoming, and that does intrigue me. So Boss Energy projects in, I wouldn't even have a clue. So again, sometimes, and I understand this happens a lot, particularly with traders, they sometimes don't know what a company does. They just look at the chart and say, well, this chart looks interesting. I'm going to buy this company. Then you ask them, what does this company do? I have no idea. I just look at the chart. Chart is telling me it's a buy. And there's a lot of professionals who don't understand that, but I actually do understand it because the chart can tell you about the psychology of the market, about the sentiment in the company at that point in time. It can tell you a lot about what's going on. And it can also, in a way, for instance, with Boss Energy, this would be a very low risk trade for me because if the share price drops to say 290 and stays below that, I'll just sell out of it. That's it. But the share price could keep going higher. So a low risk trade where the upside is quite high and the downside is quite low. And in those sort of situations, those sort of trades, you don't have to know what a company does. I know Boss Energy is uranium. They have a project, if I remember, South Australia, that is close to production. That's about all I know about Boss Energy. Peninsula has Wyoming, and that's all I know about them. Now, the next company is PeopleIN. So I started looking at this company because there was a potential double bottom here. You can see the share price at about $2.50, brown number. And usually when I have a resistance or support levels, this is very important. It's not one price. I usually look at it as a zone. But this price level or this support level, $2.50, was right on a round number. Now, the reason that was a support level was because the share price fell to $2.50 in June last year, fell to $2.50 in March this year, and both times we saw a pretty good bounce. And the most recent bounce wasn't as strong as the bounce we saw in July last year. You can see that bounce, the share price went from $2.50 all the way back up to $3.95. The most recent bounce, the share price went from $2.50 to $3.15. So the strength of each bounce is becoming weaker and weaker. That's not a good sign moving forward. And now, in the last few trading days, share price has fallen below $2.50. Now, this does not necessarily mean the support level has broken. This could just be a test. Wouldn't be surprised to see the share price go back up above $2.50. And the other reason I'm a little bit interested in this company is just valuation. And that's another way share price of a company can be supported, particularly companies that are profitable and are growing. It's just value investors come in, they see value, and they prop up the share price. That probably can't happen with story stocks because it's almost impossible to know whether a company is good value or bad value, just like a BrainChip or Weebit Nano. Who knows what the value of those companies are? But I can tell you right now, there will be a lot of analysis fund managers who know where the value of PeopleIN is right now, or where they think the value is, if this company is value right now, put it that way. I don't think I made any sense then, but sometimes I don't make sense, which is okay. I think the way I was saying is the fund managers have a price where they think this company is good value, and that value might be higher than where the share price is now or lower. And if the share price is lower than where they think their value is, that could give the share price of this company some good support. And maybe there's value right now at below $2.50. For instance, the company has a dividend yield of 5.5% and a price earnings ratio of 9.2%. Now, those numbers, you shouldn't look at those numbers in isolation. You have to take a closer look at the company. But I do know, and this is just based off me listening to other people, that there are people thinking this might be some good value. So it is interesting that after I heard that, share price has dropped a fair bit. In fact, it's dropped from about $3 down to less than or lower than $2.40 or $2.50. Now to a company I did mention briefly a few weeks ago, MLG Oz. And the main reason, there was looking like a bit of a shift in sentiment playing out over the past month or 2 months. You can see a nice little run in share price, really high volume on this day. And that doesn't necessarily mean anything. It could be just one massive trade. But the share price did bounce, nice little bounce. And the share price pulled back. And then another beautiful bounce. So it does look like potentially an uptrend developing in MLG Oz Limited. I believe this is a mining services company. Market cap is something like $90 million, $83.8 million. Company with $171 million of revenue in financial year. Actually, that's a half year. You look at the full year, almost $300 million of revenue and profit of $5 million. So again, maybe the market is seeing some value at these suppressed or depressed prices. But this is what I'm looking for when I look at charts. I'm looking at for changes in trends, changes in sentiments, and this is one of those companies where there is looking like a possible change in both sentiment and the trend in the share price. But I would like a little bit more confirmation, and preferably I like a change in sentiment and trend in the share price on the back of really positive news. Not sure if MLG Oz has released any really positive news. Unlike the next company, LGL or Lynch Group, they did release some positive news after the market has hated this company for a while. And that positive news saw the share price increase 16%. And we have seen the share price keep on rallying. And that's been rallying for 6 straight days after that day. This is a fairly positive sign for Lynch Group. Not the best volume, but still pretty good volume on that. Actually, it was, the day, a few days before the release of that good news. But this is a good, I wouldn't say a good looking chart, but it does look like the sentiment in this company is shifting because of this positive news. But I'm still waiting for the pullback in the share price. Typically, you will see after a nice run up in the share price like this, a pullback in the share price. And what I'm looking for is a pullback on weaker or lower volume. Unfortunately for Lynch Group, they've already got pretty low volume, so you can't really see if it's lower than normal volume. So that's what I'm looking for here. So the pattern I'm looking for is a pullback on low volume and then the share price starting to go higher again after that pullback. And the main thing is the pullback can't go really low. So if the pullback went all the way back down to $1.75, which is well before the release of that positive announcement, that would be the sort of pullback you don't want to see. Now to a company who released negative news. And my main philosophy when it comes to negative news is you sell out straight away, because I've seen this play out over and over again. When a company releases positive or negative news, the share price just keeps on dropping. Again, it doesn't happen all the time, because pattern recognition is also the ability to understand that when you see a similar pattern than what you're looking at now, it doesn't mean it's necessarily going to play out exactly the same as those previous times. So you have to understand that as well. But this is a fairly similar pattern. Company releases a negative news and the share price keeps on dropping. And the main reason behind that is typically what you see when a company share price drops a lot in one day, you'll get these value investors who see the share price, say for Treasury Wine, drop down to $11.80. Now, they say, well, a few months ago, the share price was $14.80. Now it's $11.80. There's great value here. And a lot of times you'll see that sort of mentality prop up a company's share price, and you'll see a little bit of a bounce. You haven't seen that really with Treasury Wine just yet, but you see that a lot. Share price drops a lot, little bit of bounce. And again, keep a lookout at the volume. If the bounce happens on really low volume, that is telling you there's not a lot of demand there. Not a lot of demand at all for the shares, and more than likely that bounce will fail. But sometimes you do get a V-shaped recovery. And that's telling you that the market has simply overreacted to the news. It wasn't as bad as the market thought. And a great example of this is Medibank. And I thought this was Medibank. I thought this was the market overreacting. It definitely was. So remember, they were hacked into or something. On the 25th or 26th of October 2022, share price fell 18%. And you did see the share price suffer a little bit over the next 2 weeks. The share price has rallied pretty nice. And this was just a case of the market overreacting. This does happen a little bit, but for most of the time, when you do see the bad news being released, the share price drops further, particularly when it comes to profit downgrades. Now, this wasn't a profit downgrade. This was just a company being hacked. And I think, this was a perfect example of the market overreacting to some, one-off bad news. It wasn't a profit downgrade for Medibank. Now, to another company that released some positive news after the market got it completely wrong. I think the market thought of OFX Group, I call them Oz Forex, I thought the market thought this company was going to release a bad trading update, and then they surprised, released a pretty good trading update. Share price jumped 20% on that day, and the share price has kept on rising. This is a good sign. And let's have a look at the volume. You can see lowering volume during this time. So I probably would prefer some good volume because a lot of the down days, we have seen some good volume there, which is sort of understandable because the share price has been significantly higher over the past year. So there will be a bit of supply. Those shareholders who bought in high prices over the past year want to get out. The main thing is, a lot of times when you see an overabundance of supply, like occasionally we do see, that means the share price should drop. Because the share price isn't dropping for OFX Group, that is telling us there's enough demand out there to buy that excess or overabundant supply. So that is a good sign for OFX Group, a company I've held in the past just or for a trade. And I'll show you where I bought. There it is. Very typical, just a breakout. Share price went above this support level. I bought $1.33 and beautiful uptrend chart, and I sold it somewhere here. Just took my profits because the share price doubled. So where the share price doubled, that's when I took profits. That's what I sometimes do when the share price doubles. Now, another thing I do sometimes, so I bought in May last year. Sometimes I will wait a year because of capital gains. So I can't remember exactly when I bought, but more than likely I would have just waited for a year, which would have been around about here at about $2. So somewhere here I probably would have sold out, just take my profits. And that was actually, in hindsight, I could have sold out a little bit higher prices over the next few months, but, just took my profits. Anyway, so a little bit different. So you can see here, this was pretty obvious breakout. Share price was struggling to get above this level. What was it? $1.33. Had been struggling for a while. And when it did break out, the share price, which was, the breakout happened on the 18th, 19th of May. And that meant the share price was nearly at a one-year high. But you can see a little bit different what we're seeing now. Share price, last night share price was this high for OFX Group was only in March. So we're talking about 2-month high. 2-month high. That's resistance. Shareholders buying at high prices is resistance. Always going to be resistance. Now to companies I haven't talked about. Oh, no, that's not true. I've talked about BOQ, Bank of Queensland. Now, one of the main reasons I want to talk about these companies is because where they are trading. And ANZ is, the P ratio is 9.9. And I have bought ANZ Group in the past when the P ratio fell below 10. That was my buy-in P ratio when it fell below 10. That was in 2016. So you can just see after this beautiful run-up in the share price from 2011 to 2015-16, share price, doubled. So you can double your money in these type of companies if you don't hold them for the long term. So you only have to hold ANZ Group for 4 years to double your money. Now, of course, you would have to time it perfectly, buy in at the bottom and sell at the top. But then I bought in 2016 when the share price got to $22, and the PE ratio at that point in time fell to below 10. And I can say more than likely there was a few other buyers as well because of that. And the share price rallied from $22 back up to above $32. So I made a nice 40% on ANZ Group in about 5-6 months. And I will always take a 40% gain in any of the banks. So definitely not the sort of company you want to own for the long term. And the reason I've mentioned I bought in ANZ Group at that point in time was simply because the PE ratio fell below 10. Typically, that's a safe trade. But even though the PE ratio is now below 10, I'm not buying in. And no, there's reasons behind that. But I could be tempted to buy Bank of Queensland, not because of PE ratio. In fact, if you look at TradingView, PE ratio of this company is 18.7. In fact, if you look at many sites, I looked at Simply Wall Street, and they said compared to its peers, this company is overvalued based off the PE ratio. But the PE ratio can be misleading. Okay, so this is Growth Focus looking at the last 15 years of financials. And if we look at this column here, I know it's probably fairly small for you. It's looking at net income over the past 15 years and over the past 5 half years. And in the last half year, they only had $4 million of income. The last 4 half years prior to that, they had 214 million, 212 million, 214 million, 154 million. So this was an unusual half year for Bank of Queensland. And if you have a look at the 4-year numbers, we're talking about 186 million, 261, 318, all the way up to 426 million. Back in 2012, they were negative 17. I still remember then. Still, I think they were pretty good value back in 2012. So I wouldn't necessarily look at the P ratio for Bank of Queensland because of their bad half year in the first half or second half of this year, which will be the first half. But if you have a look at the price to book ratio of this company over time, this is where it does become really interesting for this company. So if you have a look at the P ratio, we'll actually have a look at the P ratio first. So we'll have a look at the P ratio over the past 20 years. You can see back in 2012, they were not profitable. That's why it's negative. And you can see the P ratio has been as high as 35 and as low as below 10. So sometimes the P ratio, or looking at the P ratio for this company is not really helpful. But it's a little bit different when you look at the price to book ratio. Let's do that now. So this is price to book ratio. I'll get rid of my head up here. This is price to book ratio of the company. We'll only look at the last 20. This is the 20 years. So before the GFC, the price to book of Bank of Queensland was typically greater than or higher than 1.7. And since the GFC, typically the Bank of Queensland price to book has been less than 1.6 and as low as about 0.5. But typically the price to book of Bank of Queensland is above 0.6. And over time, definitely over the last 15 years, 0.6 has been a nice support level for Bank of Queensland. It fell below 0.6 for a very brief period during the COVID-19 financial panic. And right now, the price to book of Bank of Queensland is 0.56. So just based off the price to book, you could argue with me that Bank of Queensland has never been cheaper. We might have a nice argument there. Wouldn't call it an argument, I'd call it a nice debate. So that's why I'm looking at Bank of Queensland. If you look at the share price, this is a weekly chart. So during the during the COVID-19 financial panic, the share price of this company fell to about $4.50. During the GFC and times like that, the share price fell to about $6. So the share price right now is $5.41. So only once during the history, or recent history of this company, has the share price been lower than $5.50. Now, and during the COVID-19 financial panic, and before then, the last time share price was this low was way back in 2002. So you could say maybe there is some good. Look at that beautiful chart from 2001 all the way through to 2008. That's, you would have been wanting to hold this company. Share price went from $5 to $17.50. Probably looks better than it. Looks better than it actually is, because it was only a triple, a 3-bagger. Anyway, AGL. So this was a short-term trade for me. Just riding this bit of a trend up here back in, riding this trend we saw back in late 2021, start of 2022, and then the share price just went sideways, not sideways, but a bit of volatility. I took my profits, but I haven't had a look at this chart for this company for a while. This is beautiful uptrend that has developed since March of this year. Share price has gone from $6.80 to a current share price of about $10 or just below $10. So it has broken above the old highs we saw back in the middle of last year. That was a bullish sign. So it happened over a period of time. So you can just see here, it took a while for it to get above that level. And that's a little bit of resistance working way through. And the share price has kept on going up. So you can see as it got above that resistance level, the share price has really exploded high up. So interesting chart. And yeah, this is looking pretty bullish right now. I would wait for a little bit of pullback. I'd love to see a pullback back to this resistance level, but I think that might have already played out. So yeah, interesting chart for AGL, a company I haven't looked at for a while. So those who've taken advantage of this breakout, well done. Ooh, ABC. I think that's the wrong company. So I want to look at Adbri. Oh, there's a company called ABC Company. Is that Mexico? And yeah, that chart didn't look well. So Adbri, I did talk about Adbri, I don't know when. Would have been just after this beautiful up day. On a beautiful announcement, share price increased 22%. I've already mentioned this is sort of one-day candlestick you're always waiting for. So that solid green color. Now, if you're looking at candlesticks in green and red, which I do, that's what you're looking for, solid green. Some people look at candlesticks in black and white. So more than likely, I think that would be looking for a solid white candle. And this is telling you that the share price has closed near the high of the day and the low of the day was near the open. That's exactly what you want to see. That shows you there was a lot of strength all through the day. And that strength has just continued for this company up until now. So we've seen up days in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 10 of the last 11 trading days. And the share price has gone from $1.95 at the end of trading on that big up day to a current share price of $2.35. So that's a nice return over about 10 trading days. So definitely a really good announcement from the company, pretty good volume as well. So continued higher volume. So I think without doubt, there are fund managers buying into Adbri right now. They saw the update or whatever it was, and they did their numbers and went, this is really good value right now. So that's the sort of thing you want to look for, is really good announcements that are going to excite the fund managers, because those fund managers are the ones who are going to drive the share price higher, just like Adbri. The share price right now is at, last time share price this high was August, which was 10 months ago. On the negative side, Media had a bad announcement on the 3rd of May. Share price dropped 24%. And you can see the share price just going sideways. So no real big bounce, no real big drop. In fact, the low since that announcement was on the day they released the announcement. So I'm a little bit undecided about this announcement because the share price hasn't really dropped any further. It's just going sideways. I could see the share price drop further from here after this consolidation period. Or I could see share price go a little bit higher as people see some value in this company. So I'm a little bit undecided whether this is a bad looking chart or good at this point in time. I would like to see share price drop lower from here for me to think it is a bearish looking chart, or I want to see the share price get a little bit higher above $1.30 before I think it's bullish. Now to two companies related in terms of a big contract with Chemist Warehouse. The company that lost the contract, EBOS Group, share price dropped 12.3% and dropped the next day. So this is sort of typical, but the share price is right on a nice little support level at around about $31.75, which were the lows we saw back in October. Share price has remained above that level, and we've seen continued good volume as well, high volume, we'll say. So if the share price falls below that support level, that would be a bearish signal. So this is the sort of situation where you want to see that level hold. If it doesn't hold, and if you're holding their shares, I would see or could see further downside from there. On the flip side, Sigma, who won that contract over EBOS Group, saw their share price, and apparently it was a $3 billion contract, if I remember correctly. I don't know all the particulars around the contract, but Sigma Healthcare share price rose 22%, and it went above, I remember definitely saying this, it went above the top of the trading range. And Sigma shares had been in this trading range for many, many years. So all the way back to 2018, it went above that trading range and has remained above the last few days. So this is looking sort of like a breakout. I think you can call this now and confidently call this a breakout for Sigma Healthcare. I could envisage myself taking a trade in this company just because of this breakout. If I see the share price fall, so what I might do, and I don't think I necessarily will do this, but what I might do is I'll put in the sneaky bid at about 75.5 cents. And if the share price just goes and tests that support level, my bid might be hit. It might not, it might be hit. And if it does get hit, I wouldn't be surprised to see the share price take off after that. Now to another company that released some negative news, that's Universal Store Holdings. I'm a little bit surprised about this update. Share price fell on the day, the 24th of May, 23.9%, and has continued to fall since then on pretty high volume as well. So this was a negative update, and the reaction from the market after the announcement has really confirmed that this was a negative announcement. Not a lot of buying at all. There's one little bounce, a couple of days where we saw the share price bounce, but the share price has gone back or reverted back into a down trend. So I have put this company onto my watch list. So I want to see how much it has to fall. And if it falls a lot further from here, a potential, I won't say turnaround story, but play the cycle. And before we get to the bottom of the cycle, these are sort of companies I would be thinking about buying into. Definitely if they get significantly cheaper from here. So we're talking about Universal Store Group. Companies like Baby Bunting. I would love to see, even though I'm a shareholder of JB Hi-Fi, love to see that company's share price drop a lot. Levisa, I'd love to see that share price of that company drop a lot, even though I'm a shareholder, just because I think the market is overreacting to some of those companies. Now, on the flip side, Temple and Webster released a good announcement on the 17th of May, share price up about 20%. And this is exactly what I want to see. Now, I would have been a little bit wary about Temple and Webster because you can see between most of this chart, the share price was higher. But we saw after that day, when the share price rose almost 20%, the next day the share price rose another 7%, and the share price has just gone sideways from there. No dip in the share price at all. And that, again, is telling me, even though there is enough abundant of supply because of those shareholders who bought in high prices in the past, there's enough demand to just hoover up that excess abundant supply. So this is a good sign moving forward for Temple and Webster. And I've put this company onto my watch list as well. But the only problem with this is share price at this point in time is only at, was that a 5-month high? No, 4-month high. So definitely doesn't come into my range of, doesn't succeed in any of my filters. Well, not any, but doesn't succeed in one of the most important filters, which is I want to see at least a 6-month high. This is only 4-month high, preferably, again, a 1-year high in the share price. Electro Optic Systems. Now, I've been told I am a pumper of this company. Just because I talk about a company doesn't mean I'm a pumper. I tried to be a little bit more unbiased in my last video, saying there is a lot of risk in this company. But I just had to mention there was a potential breakout in the share price. The share price pulled back. So even though there was a breakout, this is just like the chart we saw, fairly similar to the chart we saw with Austal, Serko, where we did see the pullback and there was decreasing volume. You can see the volume as if there was a pullback, decreasing volume. And then on the next big day, the share price rose 22.6%. We saw high volume. That's a good sign. And then over the last 2 weeks, we've seen the share price pull back to right onto the old resistance level. So we've seen the resistance level broken twice. And now we have seen the share price remain above that resistance level for about, we'll almost say 3 weeks. It has tested the resistance level 2 times during that period, and still the share price remains above that. Now, even though I think this is a potential breakout, I am not thinking about taking or adding to my position in this company because of all those risks. So right now, this is the sort of company you might think about if you are a risk taker. I'm a little bit more risk averse right now, so I'm willing to just wait to see how things go for Electro Optic Systems. Now, 2 companies I did bought, but not Australian or ASX companies. First company is Tesla. I sort of hinted at this, that I might take a position in this company, just a trading position. And the main reason was I did see a fair bit of bullishness. And I had a buy-in price. In fact, I wrote it down. I don't usually write down buy-in prices, but I said if the share price gets above $220, I was going to take a position. So I put an order in, and it hit it. So I hit it on this day here, the 6th of June, bought in at $220, and share price has kept on going high up. So I've already made 10% on that trade. I could just take my profits in 3 days. I think there's possibly more to go from here, and fairly simple. If the share price falls below about $210, it's a sell. So I haven't put a stop loss. I don't put stop losses in, but I know my sell point for this company. But it's looking bullish. And the other one was Adobe, but this is a long-term buy. This is a company I've wanted to own for a while, and I just seen a bit of a shift in trend. I wanted the share price to go lower, so share price went as low as $280 back in September. I was hoping it was going to go lower and lower, but I think the trend has changed, definitely changed, and I just had to buy a position in this company. And I made the mistake with NVIDIA of not buying that when the trend had changed, because I wasn't quite sure. I was going to make the same mistake with Adobe. Anyway, so those are some of the charts I have been looking at over the weekend, looking for patterns, looking for similar patterns. And of course, history doesn't repeat, but it often does rhyme. And that's what I'm looking for in these patterns. I'm looking for familiar patterns. Now, just because I see a familiar pattern doesn't mean it's going to play out like those other occasions. It just means there's a higher chance it will. That's the way I look at that. So if you have any questions about any companies I've featured in today's video, I'd love to hear from you. So leave your thoughts in the comment section, your questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.